Good morning, good morning. Good morning, guys. Morning, Marcia. Good to see you once again in the lives. Apologies for the delay today, guys. Just ran into a little technical issue this morning, but we're all good. We're fine. If you guys can confirm everything is good, I always like to do double checks. But today we'll go ahead and get started quickly so that way we don't waste too much time. But pretty much just by looking at the market right now, we know that we're in line with everything that we've been talking about over the past couple of days and really weeks at this point, because we've been talking about the potential to see further bearish price action, and we saw that for a good amount of time until we started to get stuck inside of a bit of a range, right? Like, although we were getting some decent moves towards the downside, back towards the upside, right? And we had zones to look out for, specifically like this 4500s area. We still, overall, as we can see right now, have continued to push towards the downside off of these highs right here, right? So to explain myself a little bit further, just to kind of quickly review the markets right here. We were in this, we can look at this on the 4-hour. We can look at this on the intraday time frames, and you can see how in between these two areas from the 4500s to the 4580s, it was sort of price being inside of this range, right? Like, let me see, can I type? This range right here, right? 4500s, 4580s. We saw that those were the areas where price was having the biggest moves in the sense of like, from these highs to the lows, we have about 800 pips worth of movement, and we weren't getting any breakouts towards the downside or towards the upside. We got a momentarily breakout right here, but then overall we went back above the 4500s and then stabilized above that area for some time until yesterday. So to review the market from yesterday's price action, yesterday we were trading at the 4500s, and we were talking specifically just about this, right? The fact that the markets were stuck inside of a bit of a range, but overall we wanted to get below the 4500s, because the 4500s is that area where in the past, when we've traded above the 4500s and really stabilized above the 4500s, we've made moves towards the upside. And so although our overall fundamentals might be pushing towards a more bearish bias on gold, we still have to be aware of where price is reacting, where price is at the moment. Like, for example, yesterday it was the 4500s, and we understood that we cannot be blinded by the fundamentals being more on the bearish side while price is having reactions at a significant area. We understand that when price reaches certain zones, regardless of the fundamental narrative, you're going to have, for the most part, reactions at these key areas, whether it's the highs, whether it's the lows. That's why we use these key levels for, right? These support and resistance areas. So that way we can be aware of where the strongest buying and selling came from, which again, we pointed that out as the lows and the highs of that range. Finally, you can see why for me it's so important to wait for those candles to close, right? Wait for candle closures in your favor, because for the most part, when you have candle closures in your favor, that's just going to signal to you the strength of whether it's the buyer or the seller. In this case, it was the sellers. As you started to see candles start to break and close below the area of significance, the 4500s, and below this area right here, where you can see it's kind of where these candle bodies close precisely around the 44.90s. Look at the candle closures below the zone and notice how price afterwards, it retests the area and near the area of interest, but it does not close back above the 4500s, and then it continues to push in favor of that bearish bias. That's why for me, a candle closure doesn't necessarily mean enter the market. It doesn't necessarily mean that you've missed out on the move, right? Like say you were looking out for sells and you end up seeing that price comes below the area, closes below, and maybe you're too impatient and you can't really think ahead in the sense where it's like, okay, you understand, well, if we get a candle closure in my favor, I can wait for the retest. The mentality might be, well, the candle closed below, I've already missed the move, I'm just gonna walk away, right? And then you walk away from the market, you're not too patient, you don't end up waiting for your ideas to play out, and then you miss out on opportunities like this, where again, you have your candle closures below, and then your overall continuations. This was around the London session last night. So you have around pre-London, 2 a.m., then London comes in, and you have the retest of the 4500s, failure to break above, and as you can see, we've continued to push towards the downside. When we speak about this fundamentally, we know that we've been talking about potential rate hikes this year. So to put it into very basic terms, more so we're focused on the fact that the Fed could be more hawkish for the rest of the year, right? Putting rate cuts on hold, or possibly not even doing them at all. We have to really pay attention to the language of Kevin Warsh when we see the next FOMC, see what type of comments and what type of signals or clues the Federal Reserve might give in terms of the current narrative, which is again we're expected to see, a more hawkish Fed. That's going to be, we know, more bullish for the dollar, which has been pressuring gold, right? We've been talking about that. But the other thing as well is that we continue to see geopolitical tensions, right? We continue to see escalations in the Middle East, despite the peace talks that you might see. Like, I'm not sure how familiar you guys are with the subject, but you've seen talks of peace talks, negotiations, but for the most part, all of these ceasefires and peace talks, they end up just falling out, and the war in the Middle East continues, right? So as that war continues, remember that the war has been bringing issues or problems for potential inflation to rise, meaning that anytime that we see further escalation in the Middle East, we know that the pressure can continue when it comes to inflation. Therefore, what does that translate to? Potentially a more hawkish Fed. That for traders, for us, that means we could see a more bullish dollar and a more bearish gold, right? That's to put things into perspective there when it comes to using the fundamentals and the technicals without having to overcomplicate it too much, right? So now let's follow through on what we're seeing, right? We've seen the strong pushes on price action. We're seeing now new lows being created. We have about another 14 minutes until this hourly candle closes. I would assume, remember, we don't want to get too ahead of ourselves here with gold, because anything can happen with gold, especially in 14 minutes. But seeing how this current candle is forming, it is very possible that in the next 14 minutes, I don't believe that this candle will flip, but we'll be prepared for that in case it does. But if it does not flip and we end up closing bullish, that'll be confirming a new 1 hour support for us down at these 44.26s, right? Because remember, just so excuse me, sorry guys, good morning, didn't see that. Good morning, Elijah, good morning, Kim, Paul, Marcia. Apologies for those of you that just joined. This is kind of like what we're going over right now. The fact that gold is now a lot more bearish since we've broken out of those range lows. You can see on the daily time frame as well how price action kind of paused around this area, right, in between the 4500s and these highs at the 4580s, kind of just going back and forth between those zones, where now overnight we got some decent volume and you saw strong pushes below your area, breaking below previous daily lows, breaking below these previous daily lows as well, and now starting to enter this new range where we have reactions. Excuse me, sorry about that. Let's let the sirens pass by. I feel like that's really loud. Sheesh. Can you guys hear those sirens? I feel like it's super loud. Okay, sorry about that. They've passed. Hopefully everything's all right. But all right. So looking at this on the daily time frame, look at where price is reacting right now. You have this daily wick that has been created and the lows that we just marked off on that 1 hour. And if we look towards the left, we can see some reactions around this area. Like for example, this wick candle ended up reacting just around those 44.20s. You have, damn, they're back. Sirens are really loud, sorry, very distracting. You have these candle wicks as well, basically around that same area, kind of like the 4400s really, where price is trying to reach. You have these wick rejections as well. So it's definitely an area of interest that we see there, but anything below that, at that point, we could go ahead and even retest these 4380s down at these daily lows. So I'm gonna mark off these daily lows as well. As you can see right here, the 4380s, just in case we do end up pushing below the daily lows and have that possibility to extend that bearish move and push further down. So daily is very bearish, 4 hour also very bearish. You can see how now it's a lot more clear in comparison to yesterday. Yesterday, I'm not sure if you guys remember me talking about the ranges and why ranges might not be the best areas to really take trades, but we understood that overall markets were still more bearish. Like for example, if we looked at it on the daily, just to quickly go over this, guys, just to have that visual, it's always good to have that. So for example, you have the daily time frame creating lower lows, lower highs, lower lows, lower highs. Looks like we're creating another lower low. That's our daily time frame, right? Very, very bearish. There's a lot of sirens outside. Hope everything's all right. We're over here living in GTA right now. GTA servers have opened up. But all right, so we got on the 4 hour as well, we have our lower lows, lower highs, lower lows, lower highs. You can see how in between these areas here for a moment, let's call it, it was just in between that range, a little bit stuck, but still overall, if you connect the dots here, that's still more on the bearish side, right? Especially now that we've seen these pushes below these significant areas and we cleared those lows where in the past we've seen rejections and reactions off of that area. We've cleared also these lows, so it really signals to us just how strong those sellers came in overnight, following our overall bias. And again, notice how we use price and technicals to give us clues and to show us just how the markets are pricing in whatever narrative may be impacting behind the scenes. And look at how we use these clues of price to be able to follow along with the market. So this is why I always tell you guys, don't look to be right or wrong in the market. Just simply use the tools available to you. And then with that knowledge, you do the best you can to enter trades, right? So for example, yesterday, why do we point out the 4500s? Why? Because you know you have reactions at this area and you know you've seen one or two things. You have your rejections and price maintaining above the zone, signaling that, okay, any rejections and price failing to really trade below and close below the zone is going to signal to me that from a technical perspective, more buyers are active at this area and we could have pushes towards the upside, right? That's for one clue. Using one using one price clue. Gosh. The other clue is you wait for candles to close below the zone of interest. For example, this is the 4500s. And what have you seen in the past? You've seen moves towards the downside. You've seen moves take place. For example, you have this candle that closed below the zone. And then you have your retest, your failure to really push back above that zone, and then you overall make a move towards the downside, right? So again, rather than you sitting here and trying to fight the market, trying to force your ideas onto the market, simply follow price action, understand the narrative that's driving that price action, and now you have the fundamental narrative that you understand is should be or could be influencing gold to push more toward the downside. At the same time that you're seeing price action give you more clues that sellers are more involved in the market. As a trader, that gives you double confirmation, double confluence. It's not a guarantee, but it gives you confluences on the bearish side, meaning that odds are in your favor when you're looking to take sells in the market based off what you're following here. Again, the fundamentals, technicals, both bearish. You're trading below areas of significance, more bearish price action. You have breaks below lows, more bearish price action, right? You guys get the idea. Sounds like New York. That's funny. Yeah, they passed now, but we're good. All right, so now yesterday we were also talking about the fact that above the 4500s was an area of significance for the 1 hour, because we had seen, for example, price pushing towards the downside, right? You see this very clear bearish structure, right? When you look at where this low came from, you realize it came from these highs. It was where price created these highs right here, basically this area. You can see price made this high, equal high right here, basically signaling to us, okay, this low, this push came from this area right here. Notice how it's also the same exact area of interest that we were talking about, the 4500s, right? So that became a structure point and also lined up with a key level. Notice how we broke above that area, and on the 1 hour we shifted out of this bearish structure. You see that right here once you broke above this area right here. So above the 4500s on the 1 hour, it was more bullish because of the fact that you were creating now highs, higher lows, highs, higher lows, highs, right? You were creating that bullish structure. So what did we state yesterday? Above 4500s, like I said earlier, watch out for price to reject that area in case you're going to see any sort of push above the zone. But how you get that? With the candle closures above the 4500s. Notice again how once you finally started to get candle closures below the zone, you basically did not make your way back above that area and you ended up pushing lower. So again, using the same price zone, same clues, same ideas, just more patience, you can see how you're never really lost in the market. Can you guys agree or disagree with what I'm trying to explain right now, right? Because right now I'm doing a review and I'm trying to explain to you guys why it's important to be on the lookout for these clues, these prices, why it's important, in my opinion, to not always completely erase your chart and instead follow along with the overall narrative, because at the end of the day, it all aligns, it all connects. Notice how every single day we get on, we basically connect one day to the other, and then we just continue and we start adding more confluences, whether they're going against us, whether they're going in our favor. We use that as clues. So I want to know if what I just explained to you guys made sense, because if not, then what was the point of that? But all right, further on, we have the 1 hour as well. Again, breaking below those 4500s, very clearly on the bearish side. You see very strong candles as well. Like for example, you have this was what, 6 in the morning. We had very strong selling pressure coming in, where you have from basically the 4490s, very close to the 4500s. You had a 1 hour candle completely wipe out, for example, like this support right here. You pushed below all of these areas right here, but more importantly, you ended up getting below this area of support where we've seen reactions in the past. So you understood, okay, well, if we get reactions here, we can expect for price to pause, maybe do a pullback into the 4490s, the 4500s, and still overall be bearish, right? Like if at this moment price, let's say, pushed into this area and pulled back, we could have still been on the lookout for rejection plays to follow the overall narrative, right? The overall flow of the market. But we didn't get that. We just got a clean, straight push through. Price makes this low for us, and now this current candle that we're on, we're 3 minutes away from it closing. We're about to be able to confirm this as our area of support, but I believe like right now, like even on the 30, that was already a 30-minute support right here that got formed. But on the 1 hour, we'll be able to confirm that, and then on the 4, this is going to look exactly like a wick rejection basically off of this zone. So preparing ourselves for the upcoming market open, right? We have NYSE open in the next couple of let's call it 32 minutes, more or less, right? We have NYC in the next 30 minutes, more or less. And we see that price has given us this low, and it has also retested this previous area of reaction. So what I want to do is I want to dive straight into the lower time frames and see what this looks like. Because we have daily, 4 hour, 1 hour, everything is bearish. Everything is in our favor. We understand that fundamentally right now, there is no reason for gold to maybe shift out of this overall structure and for us to have strong pushes towards the upside from a fundamental perspective. Excuse me. Like, we don't really have any sort of information telling us that strong gold buyers should be stepping in, right? But you never know. Anything can happen. A headline can come in and the markets might react to that, or not might. The markets will react to that immediately. And so we can't sit here and be clueless. We obviously have to be aware of these possibilities. But we know, for example, if there is to be maybe a strong headline or very strong buying pressure coming into the market, where are we going to want to see price get above? Well, for example, we have the 4460s. The 4460s would be that area where we would need for price to get above that zone for us to be on the bullish side, at least on the lower time frames. We wouldn't be bullish on like the daily, the 4 or the 1 hour, but we would start to shift out of that bearish structure on the lower time frames, which is why I'm diving directly into the lower time frames right now, because I wanted just to make sure we see what the current momentum looks like. And overall, it still seems to be pretty bearish, minus the fact that price reacted so strong off of this zone. Like, look at, for example, how price reached this zone and it tried to push, failed to do so, and it created a low. We created a lower high at this area right here. And as price reached the lows again, instead of breaking through, look at how strong buyers came in from that area. So this was a very strong push towards the upside, shifted that bearish momentum for the moment. But this is what I wanted to show you guys. The fact that, for example, we could not stay above this area of significance, which is the 4460s, which is, remember what this looked like? It was this area right here on the 1 hour. This is gold at the 4460s. It's this area right here. So we would want to get above that area of previous support, because that's where we've seen buyers step in the past, right? Remember, we use clues and price action to our advantage. So that would mean that if we're talking about the bullish scenario above the 4460s, right? If we were to trade above the 4460s and above these highs without breaking these lows, then that's where I believe we can see deeper pullbacks take place against the bearish move that happened, right? But we would need to, again, we would have to stay above this area. So this would be a very high risk zone. If you were to like look for attempt on buys, I believe you were going against the overall trend, the overall structure. You're going against a lot of things for you to try and look for buys at this area. Like me personally, I would wait for further confirmations to really be on the lookout for buys at this area. That's why for me, I wouldn't even personally be looking out for buys. I would rather wait for price to get above this area right here, break these highs. And I know that this momentum that we're on is shifting, and we could see stronger buyers above our areas of significance. Other than that, for me personally, I wouldn't really look to buy gold. Even if you see that gold bounces, for me, again, just sharing my personal experience, that's not something to get FOMO with, because that's not the idea that I'm looking for. I want to see price action give me further moves towards the downside. And if I am going to be on the lookout for, let's say, pullbacks, say right now price action reacts very strong off this area and we end up snapping back into this zone, personally, I'm still going to look out for rejections at this area, fail to break above that zone, and I want to be on the lookout for deeper sells and follow the overall tone of the market, all right, which is more bearish on gold. If my analysis is going to be wrong, then that means that price is going to break these highs and I can look to adapt later on if it falls within my plan. But that means we're looking for either pullbacks into this area, which we've rejected now, and obviously we've missed that opportunity there. But the next move can be a further push lower, some retest, basically textbook setups, which is what we have been looking to do every single day. We don't look to overcomplicate anything. We're not looking for fancy strategies, keeping things simple, whether it's momentum trades and looking for breakouts, or whether it's waiting for price to stop momentum, kill momentum. Like say we were more on the bullish side, we would want to see price action stop its momentum to look out for bounce plays, right? Those rejection plays. So right now our main ideas on gold would be mainly that. So we'd have to be patient and wait and see if we're gonna get breakouts below this zone here, which I'll add an alert, kind of like at the lows. And then we'll put it at the highs as well, just in case we're doing analysis somewhere else. And then we missed that. But all right, we got very close to reaching the lows. Let's just see if there's going to be any sort of seller strength to really push price lower. We'd have to be obviously breaking those lows for us to see any sort of signs of further moves towards the downside. What I don't want to see is price action continue to reject this zone and then really start to get above those 4460s, because remember at that point that lower time frame structure would be shifting and we would have to adapt to that price action. We wouldn't be able to ignore that price action, because the other thing I'm noticing here on these lower time frames is that this push that took place here, right, that strong move back towards the upside, that basically invalidated the bearish structure that we were on the lower time frames. Remember, we'll see those shifts in structure first on the lower time frames before it translates to the others, right? You'll see it first on the 1, then the 5-minute, 15-minute, and so on, right? You'll start to see as candles continue to close, you first see that momentum shift, in my opinion, always on the lower time frames. So for example, here we saw that this was the last lower high, excuse me, that price created on the lower time frames. Remember, we're looking at gold on the 1 minute. I'm sorry if I wasn't specific. And let me move this over here so you guys can see it a little bit more clear on that camera. Right there. So again, we're following gold on the 1 minute. We see that price creates this low, high, and then we have these lows right here. So this is the high point on the lower time frames that price created for us, and notice how we broke above that and shifted above that. Notice how we even broke above these two previous structure points on the lower time frames. That's what I'm saying. In terms of sellers, we want to get, if the markets are going to gift us with easy price action and easy moves, we want to get a simple break of lows, break and retest below that area. Once we do break out, I want to make sure that we're not trading back above this zone. I want to make sure that we're rejecting that area and then continuing to push towards the downside there. Because if not, what that would mean is we have double bottom rejections, a shift out of this lower time frame structure, and then you have, if, let's see, we're about to, it looks like price is trying to break the lows. Let's see if we can just break those lows and I can shut up. But no, seriously, looking at the lower time frame structure, seeing how we broke out of that structure, that's why I continue to say, well, if we're rejecting this area here, this zone, it's a very high risk zone to be on the lookout for aggressive plays. Very, very aggressive, because again, you're going against pretty much everything. You only have at this point lower time frame confirmations, which to me is not really a number one clue, let's say, to enter trades. I like to have further confirmations, but to each their own, right? But again, the fact that we shifted out of that, that's why I say if we really trade above those 4460s, I think we would get those deeper pullbacks, because we would have failure to break lows, shift out of lower time frame structure. You have at this point, if you ask yourself, where did this high come from? It's these lows right here. That's why I want to make sure that let's break those lows, because at that point it's basically as if this move is basically pointless, because it was a very strong move up followed by a deep correction. Just corrected the entire move without hesitating, really. Like it wasn't as fast, it wasn't as volatile, but it pretty much sorry, let's pay attention to price action. But yeah, pretty much we corrected that move very, very aggressively. So that's good. What we're seeing right now, it's good though. So pay attention to this. Let's see this move. We have, this is what we want to see, because now you have, this was that overall zone. Say you, again, you shifted out of that, but you created this area here for, you know, you have to stay above that zone to have the possibility to see price maybe continue to push up. But as you can see, overall, the structure, now that you're back below this zone and you're breaking below these lows that we're creating earlier, now we're back where we say you have daily, 4 hour, 1 hour, 30, 15, 5, and 1 all in your favor now, because you've broken lows, you've shifted out of this temporary structure that got created, which was bullish structure trying to get created, right? It had to have done something like this for you to be able to say, okay, yes, that's bullish structure on the lower time frames. But again, you broke below that zone where the strong push came from. You're invalidating that. Now you have all time frames in your favor. And you can see just how strong the sellers came in off of that area. That was already, from a scalper's perspective, a break of lows in 2 minutes. You had over 100, almost 100, or not almost, but 120 pips worth of price action movement right there below the lows. So what we'll wait for now, this is not gonna be as basic as just only a retest here. We gotta pay attention to the clues that price action gave us. And that is, for example, off of these highs, you have price action creating structure on the way down. And so again, we do the same thing. Where did this low come from? The highest point, the previous highest point, that's right here. This area right here, which is about the 44.35. This is on the lower time frames. Remember, this is the 1 minute on gold, in case you guys are paying attention to that on your own computer. So that would be our area where we don't want to get above in case we do a pullback. Say we do a pullback. In terms of momentum, we don't want to get above that area. We want to make sure, as we're doing right now we're pushing. This is up like 140 pips right now from the break of lows at this area, following the overall narrative, right? I was explaining to you guys what you needed to see in terms of, you know, it was a very, honestly, this is very simple. Like, there's not even any reason to really have to dive too deep into why we saw strong selling pressure come in after we broke the lows. Like, we talked about fundamentals, we talked about all time frames, we talked about that. What I was trying to explain to you guys earlier was how we had shifted out of that structure momentarily, but now that we're looking at this structure getting invalidated, and we ask ourselves, okay, well, this is that last high point before price melted and had that push, that gives us room to really, let's just say we pause here and we create this low. That means even if price is to do pullbacks into that area and reject, structure is still bearish, even though we're getting maybe like momentary pushes above our area of interest, right? So it would still be valid in the sense that, well, this is the structure that price is creating, basically like something like, right? If you look at structure like that, you understand that even if you were to do a deeper pullback into a previous area of structure, as long as you're not breaking above that, you know momentum is still in favor and in line with what you're following, and you can be on the lookout for further pushes. You only really start to get invalidated once you, for example, let's say you create lows, you get above the 44.25s, which is our area of interest. And after you get above that area, you don't break back below. At that point, you don't want to try and force sells. Say you're looking for a break and retest, but you see that price breaks above and then just starts to trade. You want to be careful, because you don't want to get price to stabilize above your area of interest. It's failing to trade below previous sell zones, which you see here. That's a sell zone because you saw strong selling pressure off that area. So at that point, you wouldn't want to force sells, and you'd have to watch out in case prices joins going to range at this area or break above your structure points. And then at that point, you know, you probably are going to get deeper pullbacks. So pay attention to that as we're creating these lows. Obviously, if this was very, very easy, then we would see price go here, give us some rejections, and then overall continue. But we know that's too easy. We know that the market, for the most part, is going to be more complex than just simple patterns that we put out or simple scenarios that we put out on the chart. Elijah, good morning, my friend. Yeah, same. I'm looking for the sells off the 45.60s. Any other? Okay, so 44.60s. 44.60s. Any other trade, in my opinion, has too much going against it. Anything except the break of the lows. So you've gotten the break of the lows now. This is, again, over 150 pips. From just the break of lows. Sorry, I exaggerated. 130 pips. We'll call it 120 pips, more or less, in about 3 minutes. You know, again, remember guys, we're trading during New York session, pre-NYSE, and during NYSE open. Remember that this is the time and the heaven for scalpers. So make sure that you guys are following your plan and doing as your system says so. You don't, if your system says take advantage of 50 pips, get your 50 pips and call it a day and move on with your day. Don't try and go with 50 pips, which is what your trading plan says, but then maybe you get FOMO, you get too excited, and all of a sudden you start holding trades. Although some days that can work out in your favor, if it's not something that you have written down strictly that you do, then that's going to be a random result. Whether it's a win or a loss, it's random. And remember, you want to avoid that. Random wins are honestly just as bad as random losses, maybe even worse. Because if you get random wins, you're going to think you're doing something right. And you're going to try to do that again. And if you know you're not following something strictly, then you know that's most likely not going to play out in your favor most of the time. For the most part, we know that that's true. Now guys, as always, of course, I do a lot of the talking. I would like to see more analysis in the chat if possible. You know, even if you think you don't know how to send analysis, you know, say that and I'll be happy to maybe share that with you guys. But we want to make sure that we're all on the same page in terms of knowledge, awareness. We don't want to just sit here and listen to my opinions only. Remember, we're a community and we're here to talk about the markets, see how we can best take trades, you know, whether it's being active today, whether it's deciding, you know what, today might not be the best day to take trades. We, for the most part, have looked at things very objectively. Today was one of those days where we were objectively looking at the markets, understood the areas where we needed to break below, where we need to stay below, what's driving the market, what's pushing the market in this way, right? So again, so that way we're not completely lost. So if there's anybody in the chat that might feel like they're completely lost, they feel like they need help, start by taking the initiative to ask more questions and to put out your analysis. Remember, it's not a right or wrong analysis. I wouldn't say I would judge it, but I would definitely go over it and give you the best of my insights that I can. So again, don't be afraid to share that. But let's go ahead and do some analysis on US 30. We had really good analysis yesterday on US 30 in terms of, again, price zones, because yesterday's main idea, if you guys don't remember, on US 30, we were looking out for potential buys above the 57.60s. That's the area that we were looking at yesterday on US 30. Sorry, 1 second, guys. All right, sorry about that. Right, so on US 30, we were looking at price action and it was very bullish, right? We were creating highs, higher lows, highs. We wanted to see if price action can reach this area of resistance right here, this previous resistance. We wanted to see if we can pause at that zone, create a support, and then we'd be on the lookout for buys. That never happened. And as I've stated before, we always want to be prepared for both scenarios, so that way you can look to adapt or simply sit out without being blind or just lost in the market. What was the thing that we were looking out for? We either said, okay, we'll establish a support here. We know that this is the main area that we have to be on the lookout for in case price is going to get here and reject. We did not do that. What was the other scenario that I said in terms of like, well, if you're gonna go against the market and if you're gonna go against the trend that you're seeing right now, which was the bullish market structure that was being created, that's where I said I would personally like to wait for price to break the lows, create lows, retest this area, fail to break above. Now you have multiple confirmations in your favor. You had also pretty clean selling pressure and momentum off of those highs. So the fact that you were breaking the lows, getting below your area of significance, you had your breaks and retests on the lower time frames. Like if you look at the 1 minute here, this was perfect. Yesterday someone sent me a trade that they took, which again, I encourage you guys to also share your trades with me so we can analyze that. Let me just zoom out. Look at that clean. This was yesterday during market open. It was a clean breakout, clean retest, failure to break above. You see how those candles were trying to push above and still rejecting, all closing below, leaving wick rejections overall the market without you having to sit here and force it. So you're trying to force buys, and that's what you want to do. You never got candles closing back above your area of interest. You never got those significant rejections that you wanted to see off that area to be on the lookout for those retests. You ended up just getting slight pause, no real strong candle closures above your area, and then you just pushed through completely during NYSE. As you're retesting, you're failing to break back above. Why are you going to force buys at this area when you have everything going against you, right? So again, the person that sent me that trade, that was a really decent, very, very nice trade. You had price overall, say from zone to zone, about 200-ish pips right there on US 30. That's just from the zone to this zone. You can see that clean structure that was being created on its way down. And overall, it looks like that momentum really continued on until where we're at right now. I think momentum is still more on the bearish side. Let's look at that on the intraday time frames. So we have, let's just do some quick top down analysis. Sorry about this. Let me zoom in here. Yeah, we had our high. It looks like price is just right now trying to create a higher low as it's making its way down. But I do notice that there is some selling pressure in the market as we're trading below this area right here, which is this previous area of reaction. But also you can see how this current daily candle tried to push towards the upside, and then it really just left that wick, and right now we've completely almost corrected that move, and we're trading back below areas of significance. Looking at this on the 4 hour as well, it's a previous area of support, it's an area of reaction as well. So the 5520s, that's going to be the area that we're going to be on the lookout for deeper sells on US 30 down into this zone right here, the 5369s. Here's what could go against that idea. First of all, the fact that the daily time frame and that 4 hour price action, in my opinion, looks pretty bullish in the sense that we're very close to all-time highs. Like if we zoom out, it's bullish, right? The current momentum that we're on, yes, it's a bit more bearish, but overall, it's still more bullish. So we can't just ignore those potential buys, which in my opinion would be off of the lows. So rejection plays off the lows, the 5360s. If we can go ahead and reject that area, I would be on the lookout for buys and possible deeper moves towards the upside, back into this area at least. But what I would be on the lookout for, if we're going to see strong buying pressure coming in, I think price would fail to trade below this 5500s area and start to trade above that and break back above this candle high right here. So around the 5540s, so 50540s on US 30. That means above this area here. That's where I would want to see further buying pressure step in. And I say that because, again, remember, we had, yes, very strong selling pressure, as you can see. And then you have right now price action. It looks like it started to recover off of these lows. So you had the lows get created. I'm on the right screen. Okay, yes. We had the lows get created, and then you see price action started to go against this overall momentum here, where you started to see highs and higher lows and higher highs and higher lows start to get created against this momentum that we saw, remember, on the 1 hour here on US 30. So I say that above this zone makes sense to buy, because it's basically price action right now creating this for us. It's doing, to put it into simple terms, this is what it's doing. It's creating bullish structure above this zone. That's why I want to see price action stay above this area. If we're not above this area, the 50520s, 5520s, or 50,520s. I don't know what's a better way to say that on US 30. But that's where we would want to stay above. Again, to be able to follow the structure that's being created against this momentum that we saw on the seller side. If not, we're trading still below areas of significance, where in the past we've seen anything below this zone means price can at least go and retest these lows. We saw that here. We saw that here. We saw an attempt of that in the previous candle, but didn't really do so. And that it's still closed above the zone. Pay attention to that. That was the previous candle. So again, that's why I want to say above this area, the 50520s on US 30, be on the lookout for further buys. If we just go here and reject this zone, then expect deeper pullbacks down into these lows. I wouldn't be on the lookout for further buys unless we reject these lows right here. That's on US 30. And then of course, anything below that would just mean we can get deeper pullbacks on US 30. But I would expect for price to have at least somewhat of reactions at this area, because we had very strong buying pressure coming from this zone, just like we saw it once again here. So I could be wrong to say that I don't think price will just melt below the zone immediately. Like, yes, we can push through the zone. Obviously, we've seen that happen a lot of times. But in terms of what type of zone that is, again, I could be wrong. I would assume that price would at least pause here before making a move and breaking those lows. I don't think it'll just get here and go. If it does, then that's better in terms of price action, because at that point, if you're looking for breakout trades below the lows, that for you would be valid. I just don't want to be on the lookout for break of lows and price gets here and fakes you out and then ends up pushing. That's what I want to avoid, because remember that when we're looking at US 30, we're looking at US 30 very, very bullish still. We can't ignore that. Like, yes, again, the momentum right now that we're seeing is bearish, but overall this market is very bullish. So let's see if we can get above this area. That'll be clean buys above that zone. Anything below that would be more short-term sells, at least down to these lows. Where at these lows, again, we've seen strong buying pressure get in there. Just be careful with that. Wow, I was really trying to erase that with my mouse. But all right, we'll be patient there with US 30. We have another 5 minutes until NYSE volume kicks in. So let's look at this on the lower time frames. All right, what happened to gold? Oh, okay, gold is just kind of messing around. It's still trading lower. As you can see, we've broken the lows. Let's see if we can just continue on that path to make it simple for us. But let's look at US 30. US 30, US 30. This is US 30. Oh, yeah, okay. All right, there you go. Yeah, that makes sense. Again, above our area of interest, 50550s basically. That's where we'd want to see price trade above if we're going to see any sort of bullish price action. Anything below that will just signal deeper pullbacks on the seller side back into the 505-440s or the 5380s. Those would be the areas that we could be on the lookout for. Because notice also on these lower time frames, where it's like right now momentum below this area of interest that we had on US 30, the 50520s, 5520s. Notice that we are creating minus this push, kind of like with gold. We've basically corrected that move. So again, that move that you see, this strong push, almost becomes insignificant. Insignificant until you're trading back above this zone. Once you're trading back above that zone, notice how you're trading above lower time frame structure points as well. and you'd be eliminating this bearish structure that is being created here, meaning anything above here, okay, watch out for deeper moves, at least to retest these highs right here around the 50620s on US 30. If not, the momentum would be more bearish. We'd have to be on the lookout for deeper pullbacks further and lower with this structure. So something where you don't break back above that zone, you continue to reject, you then go and break lows, and you know you're following the overall structure at least down into this point, where I would be cautious of any strong reactions off this area, because we've seen strong buyers come in at the 50380s on US 30. But I think right now, still overall, going into NYSC, let's see if we can stay below that zone. I think if we can stay below that zone, that could increase the chance of us to continue moving bearish. But we got about 2 minutes left. We're at the area of interest, basically. At that point, it just becomes a waiting game, really. We could even just wait for more candles to close and get further confirmations, if that means that that's going to give you more clarity. Good to see you again, Juan. Hope I pronounced that right. Zwan was the one that took that nasty trade on US 30 yesterday. Come on, guys. A round of applause for my boy Zwan. He sent me the US 30. He had the analysis set up. It aligned with our analysis. He waited. He was patient. Boom. Make money. Simple as that. You got to know what you're looking for. It's not as easy as coming onto these streams, watching me do analysis, and then thinking that the analysis is going to be perfect and you could just follow it. It's more so a combination of my analysis with your own, risk management and your own decisions that you make. Because if not, it's going to be difficult. It's going to be difficult for you to wait for me to tell you, get in, get out, manage your risk, secure profits, secure 50%. At that point, it becomes tough. Like, what are you going to write on your journal? Like, oh, Tarzan told me secure 50. Like at the end of the thing, you're gonna have to call me and be like, hey, let's talk about this. Like, what's going on? And I'm gonna be like, what do you want me to do? Waited for the retest, like you said, and easiest 200 pips ever. That was one of those trades where it was like, damn, that is such an easy trade. Like textbook hindsight, looks easy. But I'm sure you felt some pressure maybe while you were taking. I'm not sure. Maybe not. And maybe you're just stoic. That would be the idea. I would say if you had the idea already to look for the break and retest, as you saw price breaking the lows during NYSC open, and then retesting that area just a few minutes after NYSC, failing to break back above, I'm sure if that's within your plan, you probably felt no nerves and you went for it, you got paid. Whether it was a win or a loss, I'm sure you would have been totally fine if it was within your plan. So I would hope that it was. But I mean, regardless, it was still very clean trade. It was following a strict idea, so that was good. But all right, US 30, as we can see right now, US 30 closed very much near our area of interest, and we've broken back above that zone. And we can see back above this zone, as we were talking about, strong buying pressure coming in. At this point, again, this is still going to be that key area that we're going to be on the lookout for in case price, ideally, what I would want to see, if we're going to see such strong buyers, let's break these highs. So that way we can really be on the lookout for more buys, especially if we were to go and like retest these zones. Because if we can break these highs, we'd be creating new highs. And then the retest would be just a higher low being created, possibly retesting around this area. And then we can continue to look out for buys on US 30. Just got, let me see, Bleak Crisp. Let me go back to gold. You're talking about gold. Let's see. Just got back into trading and shorted gold off the first 44.90 retest last night, when I should have waited for the deeper pullback around 4,500 with more confirmation against the short-term bull hike. Let me see this. So you said yesterday. Are you talking about this? This was what happened last night. This was last, yeah, that was last night. You're saying you took sells off that area? But I'm confused as to whether it was a good trade or a bad trade. Sorry about that. Because if you took a sell off of the 44.90s, it went slightly against you, a little bit. Yes. I mean, it looks like a very clean trade. I'm a little bit confused whether it was a winning trade or a losing trade, but it looks like a very clean trade. I think price action got, if anything, just a little bit above the 44.90s. Overall continued. That was also very much a textbook trade. Clean break and retest and failure to break back above. And you look to take, got in too early. Okay. And do you take 1 or 2 trades, 3 trades? How do you manage your risk after you take a loss? Because a lot of times, and I've seen it already also with a few people in our stream. Oh, look at US 30. Yeah, US 30 is climbing above these highs. At this point, remember, it was the buys above the 55.40s. We got a very strong volatile push above that, right? At this point, now that you're breaking these highs, you're starting to kill that lower time frame bearish momentum. That's what we'd want to see, again, above this area. At this point, this low needs to be respected in case we do a deeper pullback. Like if we do a deeper pullback and you see that price action is maybe, let me put that right there. Oh, let me go back here. Say you see price get back into this zone. It's not always going to be where you see price action act perfect and you're gonna expect for price to get here and then just reject and you're gonna be able to take an easy trade. It's not always going to be like that. So you have to prepare yourself in case you get deeper pullbacks, where in this case, if we're following this momentum now and we've killed that earlier momentum that we talked about earlier, where it's like, okay, we've basically erased that momentum. We've broken above these highs. At this point, you have a low point, a high point, a low point, another high point. That is bullish right there. What you could expect is be on the lookout for deeper pullbacks. If it's going to do pullbacks right now, US 30 is ripping. Wait for those rejections. Make sure that price stays above your area of interest. You don't want to get involved where you see price action trading here because you don't know if it's going to get here and then reject. You don't know if it's just going to break and then continue. So you want to make sure that you are patient and make sure you get those rejections. Make sure you stay above your zone of interest. And at that point, you have new highs to target right here. And you know, which is what we were talking about earlier, you know you're going along with the daily and mostly like the 4-hour and that overall tone of this market, which is the Dow Jones, being more on the bullish side. And remember, we've talked about US 30 being a lot more volatile in terms of these types of moves, these breakout moves. We saw it yesterday with the sells. We saw it today with the buys. I think this was a pretty aggressive. I'm not sure if any of you were able to take advantage of like buys back above the 55.40s. It was pretty aggressive. Also happened like close to basically at market open, but still, again, shows that the opportunities are there. Let's go back to gold and see, because I think gold, yeah, there you go. That's what I was thinking. Gold is doing a retest right now. Remember, we have 1 or 2 zones. You have your high risk zone being this one. This would be more a medium risk, but let's see if we can get those rejections off of this zone here. If we can get rejections off this zone here, and that would be that clean retest for us to continue and possibly going. This was 4400s pretty much is what we reached. So let me see, Bleak Crisp. I got into early before the H&S break on 1 minute. Oh, okay, you're talking about pattern. Got too excited. It was for. Oh, no worries. I would say, is it within your trading plan to trade during London? Is that what you do? I believe I'm not sure if you've joined our streams before, but it's good to have you here. I appreciate you for sharing the analysis. I think the trade was super clean. I'm just not sure, like, what were your targets? Like, what were you trying to target? Because maybe you had a very tight stop loss. You only gave your trade one chance. And then I'm assuming you had to deal with that FOMO and watch price action melt completely in your favor, which is something that we've all dealt with. So I'm curious to know what was your stop loss like? What take profit? What did you have in mind? And do you normally trade those hours, or was this just like a one-time thing? And by the way, where are you guys from? Because we're over here on Eastern time, but I know some people have different time zones. So I'm curious to know where you guys from. Especially the new guys. Seeing the new people. Oh, Swole, look at you. You're back in here. There you go. Living in Compton, living in Houston. So we got Swole in Compton. We got Kim, lives in Houston, but raised in New York. Nice. Paul, Miami. There you go. Got ourselves a local. Good to have you guys. Yeah, I'm also nearby the Miami area. So Vietnam, let's go. There you go. We're worldwide, ladies and gentlemen. Gates FX International right here. But that's pretty cool. I wonder if our other guy from Japan is in here. We have one from Japan that joins every now and then. It's pretty cool to see literal people on the other side of the world. Just the pure connection, internet, you get on the charts and you make money. So that's pretty cool. Let's see. All right, US 30 having a little bit of a breather now. So we'll see if we can go ahead and retest those areas there and have some clean reactions to get some nice moves, man. We don't want to get caught trading very, very volatile moves where it's like you enter a trade and it's like within a few minutes you're already taking a loss. So you want to make sure you get good conditions in your favor. Virginia, nice, bro. I feel like I gotta visit more places in the US. I've been to New York. I've been to Arizona, Utah. I think Arizona and Utah is beautiful. That was a very, very nice trip. For those of you that have not done that, I would highly recommend that if you live in the US, you gotta visit that area. Those canyons are just breathtaking. But all right, guys, let's be patient here with gold. We've seen already a very good move towards the downside, a very decent move. We've seen the continuations as well. Right now, we're just waiting on the retest. What I'm afraid of in this right here, what I'm noticing is just a little bit of a shift in momentum. Momentarily, it seems like. I believe if we start to break these highs, watch out for price to do maybe a deeper pullback. Make sure you get a clean rejection, because what I don't want to see is price start to recover on us. I don't want to see price action give us lows. And for example, again, what we always do, when you point out lows or when you point out highs, go and look at where that came from. So if you look at these lows, that's coming from these highs right here, basically this area that got created. And price broke above that. You broke above that from here. Obviously, it's a recovery. You broke above that zone, which is, let me try to make this straight. I need to get my artiste going on. But look, you broke above that zone. This is the lower time frames. This is the 1 minute on gold. So you have price breaking out of this lower time frame momentum here. What I don't want to see is this. I don't want to see price action break out of that momentum, give us a new low here. If you start to break above these highs, You then have rejections, shift in structure. You then have the higher low get created, and you have a new higher high start to get created. I don't want to force sells if that's going to be the case. Does that make sense, guys? What we need to see is price get to this zone. Remember, it's not going to be perfect, but what's important is we're looking out for rejections. But we want to make sure price gets to this zone. Again, I don't want to see that break above. Again, maybe it's not going to be perfect, but I don't want to see price breaking above this area, creating a new high for us, because at that point you're shifting out of the lower time frame momentum and this structure that we're following. So what we got to see is the rejections, meaning we got to leave wicks at that area, and now we got to get back below these lows that got created. So I'll leave this here with these lows, and these are our highs. We got to reject this zone and then start to make our way back down so we can break. What I'm trying to explain is that this right here is signaling an early shift in momentum. So I want to make sure we reject those highs and break these lows right here to really follow overall the bearish price action. I don't want to see price getting, I don't want to see price action getting above my area of interest, and at the same time that it would be creating a new high on the lower time frame. I would want to be more patient if that's going to be the case. So again, we want to see rejections, break of lows. That's what we want to see. Let's see if we get that. AD, what is the most percentage of your account that you have risked on a single trade? How did that turn out for you? Jeez. That's a crazy question. I'll be completely honest. I've risked my entire account and blew it. You know, I've done that before. It's usually not the greatest idea to throw very high risk, but we've all heard of full margin before. I'm trying to be honest with you guys. I'm not a perfect trader, not a perfect human being, so yeah, I have risked pretty much my entire account, you know, like $1,000, and it just completely blew the account. But here's what how I like to view risk. You know, I see a lot of people, they treat a lot of accounts with, I think, too much care. Like, let's just give an example, a very, very simple example. If you have only $100 in a trading account and you're risking 1 to 2%, let's be honest, you're not going to progress too much. You know, $1, $2 for the most part. I might be speaking from a point of privilege because I live in the US, but $1, $2, you don't feel too much when you lose $1 or $2 or $3, right? So if you have a $100 account and you're risking 1 to 2%, the discipline behind that, sure, it's good, but you gain very little experience, right? You gain very little experience because you have it doesn't hurt. Like, you need to be able to experience what it feels like to lose money that you were not prepared to lose. Like, I feel like all traders have to go through that to really be able to dig deep and find out whether this is something that they can do or not. Because for me, the way that I started to approach that type of risk was more so, I'm gonna risk what I'm comfortable with risking. But at the time that I was saying that to myself, which was, I would say, at least like 4 years ago, that was 2022. In 2022, I had $100 accounts that I was trading with. The progress has been real. Exactly. You need the pain. You need to feel that. You need to see the market take your money. Like, it has to happen. Whether you want it or not, it has to happen, and it most likely will happen. The way that I started to approach my trading, again, because at that time I didn't have a job, I was trying to solely focus on trading, didn't really have too much money, I'll be completely honest with you. I didn't have anybody giving me money to go and trade, or that believed in me or something like that, or a rich uncle or something. Nothing. It was on my own, and on my own, all I could afford at that time was high leverage high leverage brokers, $100 to $200 at a time, but I would risk what I was comfortable with risking. Meaning I was risking on $100 or $200 accounts. It was mostly like $200 accounts, to be real with you and to speak with my experience. And I was risking $20 at a time, $25 at a time, $50 at a time. That's like 25 or 50% of the account, because I had a $200 account. Like, let's be real. You don't want to really do that, right? But I don't think it's important to focus on the percentage if that's your case. Like, if you have only a couple $100s in your account and you're trying to build that up, risk what you're comfortable with losing. Like, if you have $100, but you know that the leverage allows you to risk $25 at a time, and that's what you feel comfortable risking, risk the $25. Like, I don't think you trading 1 to 2% at a time, making $1 or $2 here is gonna do you any good. Go in there, $10 at a time, $20 at a time, and you know damn well at that point, you know what, $20 still might not be a lot of money, but go over trade and go do that a few times and lose a few trades. Watch how quick you lose that money. Then you're gonna feel that pain, because all of a sudden it's like, damn, I'm over here risking 25% of the account because it's a $100 account, right? But remember, it's that pain that you need to feel. You need to be able to experience that specific thing that you might be afraid of. Same thing with the profit, guys. You guys might think that this is only about just, oh, I just want to get comfortable with what I'm losing. You'd be surprised how many people can't take the profit side of the market. Like, you'd be surprised how many people will say, for example, they'll be in a trade and they're about to take a full stop loss, and they're completely okay with taking the full stop loss, full $50 completely gone that you risk, right? Just giving the example. But the moment that it comes to holding a trade that you're in profit, and you know you gotta wait for price to get to those 100 pips, so that way you can make yourself those $100, why are you securing at 20 pips? Because you're afraid. So again, you need to have both sides of the spectrum there, right? You need to see how you react when you're losing money, and money that matters. Again, $25 to $50 at a time when you're just starting out, and you're only risking, or you're only depositing 200, 500 at a time. Believe me, that's where you're going to see that progress. Don't focus too much on that 1 to 2% per trade. I don't think that's the way to progress on those small accounts. Do 1 to 2% when you're trading, a $10,000 account, 25,000, 50,000, 100,000. When you have higher capital, more capital to trade, okay, there at that point you need to risk 0.5%, 1%, max 2%, because again, you're dealing with way larger size. But when you're, again, a couple $100s in, risking $10, $20 at a time, don't worry about that, man. Don't worry about that. Like, I'm not sure if that's what you wanted to know with the question, but that's the way that I approached it. I'm just sharing you my own experience there. And at the same time, with gold still rejecting these highs, at this point we got to break these lows right here. Going back to gold. Oh, look, it's already listed for us. There you go. It's like we're fucking market wizards right here. But yeah, you want to get the rejections. Now we just need to get the breaks of this to really pick up momentum and have that possibility of us retesting the lows. So hopefully I answered your question there. At the same time that gold was doing this, again, we really just got to break these lows right here without breaking above here. If we break above here, that starts to invalidate that bias again, and that's not what we want to see. So we just need volume in our favor at this point. Still looks decent because it's still trading below the zone. We need the volume. Thanks for the honesty. That really helps my trading psychology. Yeah, I mean, I did that for a while. That's why I shared that answer with you, because like I said, I have risked my entire account. Like, I used to have, you're out here you're bringing back the PTSD, man. Dude, I used to do like $500 accounts, and I used to build these accounts to $1,000 in a week. Like, in 3 trades, I would freaking flip this damn account. On Friday, it was always Fridays. On Friday, I would go and I would realize, you know what? I just basically flipped this account 100% from $500 to $1,000. Now that I have $1,000 in my account, I can risk more, and that was the mistake. Because then I would go and risk more, and I was risking way more than I was planning on losing. Account blown. a full $1,000 gone. So it's like, what was the point of all of that, you know? That's where I started to get more comfortable with, you know what? Even if I just built my account, I can't, because I was trying to go based off the percentage. That's why I was talking about the percentage earlier. But I would tell myself like, okay, every time I build up my account, I blow it. Why do I blow it? Because I would go from risking $20 to maybe $50, and I was comfortable at that zone, to then, you know what? I now have more capital in my account. Let me just risk $200. And then before you know it, I enter a trade and my fluctuations go from -10, -30, -$50 max, and I would lose it. It is what it is. I would walk away. To all of a sudden, -130. It was like one trade in 1 minute, and I was -$150. I was like mind blown, you know? Or the same thing with the profit. Trades that I would enter on those days that I decided to go high risk, in a matter of 2 minutes, I was up $300-400. I was also mind blown. Both ways for me was just too much. So what did I have to do? I had to realize, again, based off my trading plan, and this is literally all things I've discovered on my trading plan, I realized, you know what? I'm not comfortable risking over $50. That was it. I'm not comfortable risking over $75 or $100. That's max. So instead of me focusing on the percentages, or trying to flip accounts, this and that, I started to focus solely on what am I comfortable losing? Okay, I'm getting paid this from this job, this from the other job. Okay, I can put $100 to risk for the market. I know I'm comfortable with doing that. That's what I'm gonna do. And that's what I would go based off of, you know? Again, that's my own personal experience. And going back to gold, guys, we broke above our area. So at that point, we do have to be cautious because it's going against our this is invalidating that bias that we want to see. Like, we're still very much, remember what I spoke about, that we still have this as our area where price can easily still pull back to and then still push. But for the time being, be cautious of price trading above this zone. We just need to see price maintaining below our area, right? And I point this out because you don't know with gold, remember, it's not going to be always perfect, but you know with gold, a lot of times you'll see quick pop-ups, some fake outs, continuations. We've seen that a lot with gold. That's why I point the zone out. That's why I tell you what to look out for. But we point out multiple possibilities because, again, we know the market is not going to be perfect. Again, at this point, now that we've broken above the highs, we still need the same type of things. For one, candle closures below our area of interest. But two, the most important part at this point, we got to break out of this momentum. We got to break out of this minor momentum that price is starting to pick up on. Does that, you guys see that? I'm on the right screen, right? Yeah. That's the momentum that I want to see die out. Those buyers that stepped in from these lows that are slowly pushing price higher. I want to make sure we're not continuing on that. So again, what do we need? We need the rejections of this area, but most importantly, the breaks out of that structure to shift out of that momentum. We'll leave it. I think we can leave it like that. I think move it slightly. There you go. But all right, guys, damn, today time flew because we got on a little bit late. I apologize for getting on a little bit late, guys. But remember, I told you guys, anywhere from 8:15 to 8:30, we'll be live. So make sure you guys subscribe, turn on those notifications. You guys have my Instagram. You guys have my Gates FX Instagram as well. So you guys can always, you know, contact us there if you have any further questions. But all right, let me see. AD, you have... Okay, do you take profits as the trade goes in your favor, or do you wait to take 100% only when it hits take profit? Are you talking about right now, or are you asking me what I used to do before? Because for me, it all depends on account size and the risk that you put on. So if I'm risking about 1%, now that I'm trading, let's say on higher accounts, remember, this is just to give you guys an example. If I'm risking on, or excuse me, if I'm trading on a $100,000 account, say I'm trading on a prop firm, I'm risking at that point 1%, you know, per trade, more or less. I'm looking to secure that full 1%. You know, I just want to, okay, you're asking about now. Yeah, right now, with the positions that I put in, I, for the most part, will put either 0.5%, 1%, or 2% based off the setup. You know, for the most part, if I know I have fundamentals in my favor, technicals in my favor, it looks like a very high probable trade, I'm looking to risk anywhere from 1 to 2%. But when I risk anywhere below the 2%, it usually means that my account size is still not too high at a point where I want to risk more or play around more with my profits. So I'm risking 1%, but I'm looking to secure, you know, 2% out of that, 3%. And I'm looking to really try and build up more. Sorry about that. I switched the, I didn't switch the camera. But what I'm trying to do is build that cushion. I'm not sure if you've heard of that term before, but that for me is one thing that really helped me with my trading, because for me, whenever I was starting out most of my accounts, whether it was prop firms, whether it was live accounts, I always had that urge to, okay, profit, profit, profit. Obviously, that's what we're doing in these markets. We're looking to make money. But that constant urge to make profit usually led me to make bad decisions, and therefore I would end up taking losses, right? So what I started to do was, instead of looking to just get home runs and like I wanted to get immediately up 3-5% on my accounts, I decided, you know what, when I'm first starting out my accounts, say I'm at that break-even level, I'm looking to gain 1-2% depending on what I risk. If I risk 0.5%, I'm looking to gain 1 or 1.5% or maybe even 2% depending on the trade. If I risk 1%, I'm looking to gain at least 2% at minimum, right? And I build myself that cushion that once I get to the point where I now have more profits, I now have basically money that I'm playing with that wasn't even mine to begin with. At that point, that's when I start to secure 50% of my positions. That's where I've gotten my biggest trades from. When I'm able to take more risk, but I'm not always allowed to take that risk. I need to earn that risk, right? I earn that through more capital because I gain that from the profits. And where do I get that from? From following a system, you get me? Once I follow those steps and I'm risking 2%, sometimes even 3%, which is high for the account that I'm on, it's kind of like, at that point, I can look to secure 2%, let 1% run. Because you now have more room to play with that profit. But in my opinion, you gotta earn that. You don't just get to go onto the market and do that always. So I always try and build just like, there's a term for that. There's a term for that. They call them base hits. Yeah, it's like baseball. You look for home runs, you can't always get home runs. But base hits, they build. That will compound little by little. Once you gain, and the other thing that's important about the base hits is that you're following a strategy and you're following a system. So you're basically just getting better at what you do. Meaning that when it comes time to risk more, you're still doing the same thing. Does that make sense? It's not like you just went from one day to the other, full risk, full profit. This is what I want. Your brain is just not going to be able to take that. Excuse me. So that's what I look to do, usually. That's the way I've learned to protect my capital, my profits. I gotta be able to get to that 3 or 4% in profit to really be able to get to that point where I'm like, okay, I'm risking more now, but I'm still securing at that point those base hits, always securing that minimum. Like whenever you have that opportunity to take money from the market, take that, dude. You're going up against very smart individuals, smart machines designed to take your money. This is a battle of one another. For every winner in this market, there is a loser. You know, you gotta buy at the same time that someone is selling. One of them is gonna lose. One of them has to gain money. Yes, it makes sense. Thanks for the clarity. Understanding this better now. Yeah, it's different. Other people will tell you differently, you know. But for me, it's more so about having a strict plan and always looking to secure profits when you have that chance. Because you need to build that. You need to build that in your brain. You need to teach your brain to take money from the market when you have the opportunity. If not, you're going to constantly teach your brain to look for home runs and for those trades that you see these traders post online, and it's I made this amount of money and this and that. You feel that FOMO as a human being. They're like, damn, I really want to do that. And then before you know it, you go and you trade the markets, and the markets just take advantage of you. And the weak mindset that we might have. you know, to not throw shots at anybody, of course. I'm just being 100% real. But all right, gold. But yeah, focus on those base hits. Once you gain that consistency, you're going to be able to risk more, and you're going to be able to take advantage of more moves. Let's go really quickly here. I think we had some data that came out. Look at this here. Richmond Fed Manufacturing Index came in a little bit higher than expected. So the forecast was 4, it came out at 13. So it still looks like, in terms of looking at this could be more dollar positive. For gold, I believe this can still keep it more pressured, but from a technical perspective, guys, we still need to follow the same things that we were doing earlier, which is we need to see price trading below our area of interest, being the, look at that right here, being the 44.28 on gold. As you can see right now, we're still on that little momentum that I said we need to kill off. Let me get this where I was, right here. We're talking about this momentum. We're still pushing from what it looks like, still trading above our area of interest, still not giving us those strong candle closures below our area. So that's why we have to be careful where they're with gold, guys. But guys, we've reached our time. Unless anybody has any more questions, you know, I always like to give you guys the opportunity to ask me any questions to end the stream. I will gladly answer that for you guys, but if not, I believe we can call it a day. Just to quickly review the market of what happened today with gold. We were looking out for this bullish momentum to die out, well, which was price pushing towards these highs. And how we were going to see that was by breaking below the lows, right? Today was a very simple day in terms of price action, because that's what we were looking for. We wanted to see either a deeper pullback and rejections off this area, which we got that very early, basically when we started our stream. So by the time we did our breakdown and did everything pretty much, it was a little bit too late to really be prepared for that specific one. But the next one that we prepared for was the break of the lows. As you can see, that played out for about 150 pips below the break of the lows, even more. This is 240 pips. Okay, even more. I measured that wrong earlier. But again, you had some multiple attempts there, multiple chances when it came to those sells. Then the retest really only played out momentarily, about another 100 pips. Very aggressive type of moves, right? But you can see once we started to climb above that area, as we're doing right now, those sells have been invalidated for the time being. At this point, we want to make sure we reject this area, but not only reject this area, we got to get back below our zone of interest, guys, all right? Because we want to make sure we kill that bullish momentum that you're starting to see right here. Bullish momentum, again, stay below this area so you can overall continue bearish. But as we're seeing right now, we're seeing a lot of momentum picking up. We'll see if we can reject this and get back below here. That makes sense. If not, adapt to this momentum and be on the lookout for further pullbacks against the bearish price action. That means price action, why I say that is because price can come now here, still be on this momentum, reject these lows, and then continue to push. That's why I said you want to get the rejection of those highs and the breaks back below. So again, you kill that momentum, you break back below an area of significance, and at that point you can continue to follow the bearish bias. So for gold, again, momentary moves, we can say, which played out very, very well. So I'm hoping if some of you were able to make money off that, let me know, whether it's on Instagram, text us, send us screenshots. Remember, guys, we'll be doing giveaways for those that can be more active. So if you guys are sending me trade ideas, if you guys are sending me analysis, if you guys are sending me that you took your trades, win or loss, the fact that you are taking a trade, journaling it, going through the effort to send it to me, so that way I can review it, we can talk about it, I can show it to people on the stream, and there's something to talk about in terms of like education, so we can pick each other's brain. Do that. I promise you that gives you a stronger chance at winning those giveaways, because I'm not going to just be giving giveaways randomly, to be honest. I want to make sure that the people that are here active and are keeping our streams very engaging and helping me continue with the education, I'm going to make sure you guys get rewarded. So we already gave away yesterday a surprise $200 to one of you guys that was here showing up every day, at least with the courtesy to say good morning, send the 1 or 2 trade ideas, a little bit of back and forth. And that was, again, enough for me to see that, okay, this is an active person. They're the ones that deserve it. So obviously there was a few more people in there. Trust me, I see who types, I see who's putting in the effort. So again, if you took trades, send that to me. We'll make sure that we'll do some extra giveaways if we have to, because if people are gonna put in effort, we're gonna make sure at Gates FX that you guys get rewarded, all right? So again, gold, our review, that's good. As you can see, that bullish price action, you see how we saw that on the lower time frames. We didn't call it out. Me personally, I was waiting still more on the sells. We weren't here trying to call out that the buyers were going to step in. But did we or did we not point out the momentum and where we needed to stay below, break below, to shift out of that? If not, what could happen? We could see buyers step in. What did we see? The momentum never got shifted. We were, if anything, breaking back above areas of interest. We were not showing those strong rejections on the intraday time frames off of this area. So at that point, we were just now going against the momentum. And look at how price just ended up pushing. So again, it's not something that we were calling out for, but we were still very much aware of how that could happen. And we saw that on the lower time frames. But that was against mostly our analysis. So we'll leave gold there. US 30. US 30, same ideas, or excuse me, the ideas were watch out for momentum to pick up on the seller side below the area of interest. We knew below these lows, price can easily continue, but the overall bias still on those higher time frames, bullish price action. US 30 was mostly bullish, like also on the daily, 4 hour. 1 hour was more on the momentum of the seller side, but we pointed out this as our area of interest. And the other thing that we said was, because we said, okay, the aggressive buyers stepped in at the area of interest on US 30, but if we can get a breakout above these highs, did I or did I not say that? And a retest and fail to break below, we could see price push back towards the upside. Look at what price did. And to point out why I said that, it's because we had our recovery, we had our high, we created a low point here. What I wanted to see was price break out of this momentum that it was on, which it did right here, very aggressively. But you can see it broke out above the structure point, broke out above the area of interest, broke out above this area as well, this structure point, this high, created a new high for us, retested a structure point, a previous structure point, created a support, rejections. This is multiple rejections. Boom, picture perfect, break, retest, continuation, US 30 on point. So both of our analysis, for the most part, pretty much on point with everything that we said, and we were prepared. The one that caught us by surprise a little bit there was gold with this strong push. So once again, guys, I appreciate you guys for coming. Thank you guys for your time. I will see you all tomorrow around the same times, and take care, everybody.